I think we can get straight into it, and those who join us, join us. Okay, so I've hit the record button. As you all know, today we are doing Unit 3. Today we are doing Unit 3, okay? So I know some of you, this is your first lesson with me, the entrepreneurship guys. We will obviously talk more in our session, I think it is tomorrow, if I'm not mistaken. We will talk more about how best we can coach or go about the things that need to be done. Okay. But at this juncture, I can tell you can obviously see my screen, which is perfect. Okay. All right. So yeah, as I said, we will be now getting into Unit 3. Okay. We've played around with Unit 2 quite a bit. All the YouTube videos are there for Unit 1 and 2. And now we're stepping into Unit 3. And Unit 3, as I have highlighted to you guys, is about VAT, value added tax. Yes. So, at any given point in time, if you guys would like to ask me anything, would like me to re-explain anything, or would like to actually, ask a question in relation to the content shared, by all means, please feel free to do so. I more than welcome it. I know we are online, but that doesn't mean we cannot interact and engage each other. Okay? That does not mean we cannot interact and engage each other. So let's get into it. First things first. All right? When it comes to tax, I'm sure we're all familiar with tax and what it is. But we have two types of tax. We have direct tax and we have indirect tax. Okay. Now, when it comes to direct tax, this is the tax that we pay as individuals. Okay. This is the tax that we pay as individuals. Now, just want to quickly check something. Just make sure my mic is working. Okay, perfect. Right. So, as I was saying, we have direct and we have indirect tax. Okay. Direct tax is the tax we pay as individuals. So, based on the salary or the income that I generate, I will pay tax based on that. Can you see? Direct tax is very specific because it's based on how much I earn as an individual, right? Now, indirect tax is, as you can see on the slide there, indirect tax levied by vendors on the supply of certain goods and services. Okay, all right. So this is actually the definition of VAT. It is an indirect tax that's levied by vendors. In other words, people who are providing a good or service, all right, on the supply of certain goods and services. Okay, so that is your definition of VAT. I'm sure we've all seen that whenever we've bought a piece of clothing or paid for a service, all right, when interacting with suppliers and goods or services. Okay, so we should all be familiar with it, but I'm sure we will learn something new today. So when it comes to, just to speak a little bit more in terms of indirect tax, right? When it comes to indirect tax, we're talking about something that we only incur as a result of participating in a particular transaction. So for instance, if I import goods via Amazon, okay, I'm going to pay import tariffs, all right? I would not have paid import tariffs if I did not buy what I bought over Amazon, all right? For instance, if I went and bought the cell phone directly at one of the stores here in Gauteng, all right, I would have not had import tariffs. But now I'm incurring import tariffs as a result of participating in a transaction where I'm importing from a different country or continent, okay? So can you see that is an indirect tax? You're only incurring that tax as a result of the transaction you have participated in, all right, by choice, okay? Whereas direct tax, it is something that is levied directly on me, regardless of what transactions I choose to participate in or not, okay? Right. All right. But let's move on. Let's move on. So we've defined VAT. VAT is an indirect tax levied by vendors, all right, on the supply of certain goods and services. All right. We now know what that is. Let's get into it a little bit more. Okay. Then we go on to say um, a VAT vendor. Okay. Who is a VAT vendor? Who is a VAT vendor? All right. Now, when it comes to VAT, not anybody can just charge VAT. For instance, if I started supplying goods and services, I couldn't just begin to charge people VAT, all right? Because in order for me to charge people VAT, I need to be a VAT vendor. How do I become a VAT vendor? I need to be registered for VAT with SARS, okay? Right? So that's what a VAT vendor is. It's somebody who is registered with SARS, right? Obviously, when I say someone, I mean as an entity. It's a business that is registered um, with SARS. Okay. Here, the exact definition says a person or a business that is registered for VAT is called a VAT vendor. Okay. A person or a business. So it can be a person or a business. Then it goes on to say if an enterprise has or is expected to have an annual turnover of taxable supplies of over 1 million, it is compulsory to register as a VAT vendor. All right. If the annual turnover is between 50,000 and a million, registration is voluntary. Okay. So in other words, if your sales, that's what turnover is. It's just your sales. If your sales is greater than a million, then you have to register for that. If it is less than a million, then if it is less than a million and between 50,000 to a million, right, then it's optional. It's up to you. You can volunteer to register for tax. Okay. And then when you guys see me again face to face, do ask me, why would you want to register for tax? I mean for VAT, if you don't have to. Okay. I think that will be a good discussion when we see each other again face to face. Then what we also know is that we have different types of VAT vendors. Okay, and we've touched a bit on that. All right. Voluntary and non-voluntary. Non-voluntary are those who, or should I say compulsory, are those who have to register for VAT because they're selling more than a million. Non-voluntary, voluntary are those who have registered for VAT as a result of the fact that they actually want to be VAT vendors. Okay, cool. Then the last thing that we want to touch on, all right, I'm on page 74 in your textbooks. For those of you who may be wondering, the last thing that we want to touch on is VAT return periods. Okay. All right. Now, a VAT vendor by law has to keep accurate records of all transactions on which VAT is applicable and to report to SARS on a regular basis. Okay. Now, how regular that will be depends on the VAT vendor. All right. But most of them have to submit on the 25th of every second month. Okay. If your turnover is more than 30 million, you must submit a monthly return. All right. Then you can submit 6 months, every 6 months. All right. Or annual returns are also possible in certain instances. So you could probably do it every 6 months if you don't have that many transactions, or you can do it annually if you don't have that many transactions. So those are the different VAT periods that you have. You have every 2 months, you have every month, you have every 6 months, and you have annually. Okay, take note of that. Okay, take note of that. All right. Right. So let's see. Are there any thoughts or questions? Okay, everybody seems to be good so far. Then let us proceed. Let us proceed on to the next slide. Right. A VAT return. Okay, now this is actually the document that you'll be handing in every 2 months for most businesses, or every 6 months, or every month if you're earning more than 30 million in turnover, or every year. Okay, it's a VAT return. This is what you give over to SARS. And in your VAT return, it's a summary of all the VAT transactions which took place in a business during a specific period. Okay? So if you are returning VAT every 2 months, it's going to pertain to just those 2 months prior to when you submit it. Okay? So it's for a specific period. Every return is for a specific period. It will show the amount of input VAT paid, the amount of output VAT received, and the difference between the two. Now, some of you are wondering, what is input VAT? What is output VAT? And I would like you to tell me over the chat, what is input VAT? What is output VAT? Somebody tell me. What do they think input VAT or output VAT is? I know you guys have had accounting before in high school. And like I always tell my students, you are more than welcome to guess. Some of you may even just Google it. I don't mind. I don't mind. Just don't want this to be one-way interaction. So somebody tell me there in the chat, what is input VAT? Okay, and Etienne has informed us what output VAT is. Thank you very much for that, sir. Are there any other thoughts? Come now, come now. We can't be our only one. Output VAT we charge to customers. You're 100% right there, Mr. Etienne. You are 100% right. Input VAT is the VAT that you receive from making purchases. Okay, okay, okay. I see you there, Melisha. Yes, yes, yes. So I'm 100% with you. 100% with you. Anybody else would like to comment there? Just your thoughts in your own words, what input VAT or output VAT is. Thank you, Etienne. Saying input VAT is owed to us by SARS. Oh, all right, awesome stuff. Thank you very much. I agree with both of you. So output VAT, yes, that is the VAT that we charge. As a VAT vendor, there are two types of VAT that we will find ourselves playing around with. The first type of VAT is that of input VAT. Input VAT is the VAT that you incur. So for instance, let's say we're running a spaza shop, okay? Now in our spaza shop, we have sweets, we have Coca-Cola, we have pies, we have crisps, your Simba chips and the like, your Lays, okay? So now, in order for us to stock up, we buy our groceries from, what's this wholesaler called? Why am I forgetting it now? Macro. We buy from Macro and we maybe buy from Game. We buy from those wholesalers, okay? So when we go and buy our big box of Simba chips, okay, or our cans of Coke from these wholesalers, we're going to incur input VAT. We're going to pay that to them. Does it make sense? On their pricing. That is what we call input VAT. Why do we call it input VAT? Because we are paying VAT on the inputs that we need, the stock we need for our business. Okay? So that's how I want you guys to think of input VAT. Input VAT is the VAT that I incur or must pay as a result of buying my inputs. Okay? That is input VAT. Okay? Buying my stock, things that I need for my business, machinery, whatever VAT that I incur. Also buying vehicles, there's also VAT on that. Okay, you can obviously then claim it back. All right. And once again, Mr. Etienne, you are also right. Both of you are right. Now, that input VAT is owed to us by SARS because we can claim it back, because we can say to SARS, we incurred this input VAT as a result of trying to buy what we needed to actually run our business. Okay, so it is money that SARS obviously owes to us. Okay. So that is input VAT. Okay, whenever you think input VAT, think my inputs in order to get my business going, my stock, etc, etc. Okay, I think that's the easiest way to remember it. Okay, then output VAT, all right, as was highlighted, it is what we charge. So now we have bought our stock, all right, we bought our stock, we bought our chips, we're now selling it at the canteen, all right, to our customers, okay, or to our clients. We are also going to charge that as a result of being a VAT vendor. All right, we must also charge that. That which we charge is then what we then call output VAT. Okay, output VAT is what our customers pay us in terms of that. All right, I've spent quite a bit of time there, and I think I've needed to because these two concepts are very important. So again, going back to the VAT return, okay? So input VAT is what is owed to us, and output VAT is what is owed to SARS, okay? SARS owes output VAT. So when you think output, think it is the VAT that is incurred when we sell our output, all right, to our customers. It could be a product, it could be a service, all right? It is our output that results in output VAT. Does that make sense? Okay, cool. All right. Let's proceed here. Now here you get the definitions as per your textbook. Input VAT, VAT charged to a registered VAT vendor, that being us, on purchases of goods or services from another registered VAT vendor. Now this is very important. We didn't talk about this. We can only be charged input VAT by somebody who is a registered VAT vendor. If they are not a registered VAT vendor, okay, then they have no right to charge us VAT. Okay? All right. Awesome. Let's proceed. Output VAT, VAT charged to customers by a VAT vendor. Okay? It's charged to customers by a VAT vendor. Okay. All right. So I think we've exhausted those two. Let's proceed. Okay. Now this slide looks interesting. Okay. Now, but before I go there, okay. Right. Let's get into it. Right. Let's get into it. Remember, we said the VAT return document is the document that communicates how much VAT is owed to SARS by way of output VAT and how much VAT is owed to us by way of input VAT. Okay. Now, the next thing we want to ask ourselves is, all right, fine. We get that, but then what do these formulas mean? Or these expressions, what do they mean? Okay. With our VAT return, okay, with our VAT return, if our input VAT is greater than our output VAT, okay, then SARS has to pay, all right, us. Okay, and when I say us, I mean the business or the VAT vendor. Okay, I'll repeat that. On the VAT return, right? Remember we said it's a summary of how much input VAT and output VAT the business has obviously had during a specific period. If the input VAT is greater than the output VAT, remember we said the input VAT is what SARS owes us. So if what they owe us is greater than what we owe them, then SARS pays us. However, if the output VAT, what we owe them, okay, is greater than what they owe us, then we pay SARS. Okay, we pay SARS. Does that make sense? We do this for consistency. We then have to pay SARS. Okay. So somebody tell me. Remember, we discussed in great length different account items such as rent, expense, rent paid, interest, etc., etc. And we categorize those things in learning unit 1 and 2 to say this is a current liability, this is a current asset. All right. Now, what type of account then? Somebody tell me what type of account is input VAT, number one. And number two, what type of account is output VAT? Somebody please tell me. In the chat there, what type of account is input VAT and what type of account is output VAT? So somebody tell me in the chat. Okay. Thank you, Jacobus. And thank you, Etienne. All right. I like this. Okay. All right. Thank you all for your sharing. Malaysia, yes, thank you for that. Nolwazi, all right, thank you for that as well. So I think let's start with input then. I think we all agree that input is an asset. Yes, 100%. All right. Thank you, Aria, as well. We all agree that input VAT is a asset. But now, what type of asset is it? Is it a current asset or a non-current asset? In other words, is it a long-term asset or a short-term asset? Somebody tell me there in the chat. What is this thing? Okay, Stone says it is a current asset. Current. Okay, Bahati also says it is current. Abigail, current. V, current. Current. Nawazi, current. Okay. Also says it is a current asset. Okay, so you guys are 100% right. All right, and I'm taking my time with this because it is very important. Okay, so you guys are 100% right. It is a current asset. Okay, but now tell me, okay, so we've identified input VAT. So somebody tell me now about output VAT. What is output VAT? If input VAT is a current asset, what on earth is output VAT? Okay, current liability. Thank you, Abigail. Thank you, Storm. Right. Thank you. Current liability. So you guys are 100% correct. Thank you. All right. Malaysia. Sorry. You guys are 100%. It is a current liability. Okay. Okay. What's important to remember is that they are opposite. One is a current asset and the other is a current liability. Okay. Very important. Okay. Because we will constantly be testing your knowledge on this. Okay. So awesome stuff. Thank you guys. Let's proceed. Okay. Now, the other thing we need to be take cognizance of is the fact that when it comes to VAT, we have different VAT suppliers. In other words, we have different VAT categories. Okay. We have standard rated supply. So what happens with standard rated? All right. What happens with standard rated? Number one. Let me use different color. Let's try this. Never used this before. What's in there? That's fine. I'll work with it. Number one, we have standard rated supply. Okay. So with standard rated, we, the suppliers, can charge 15% because that's the current VAT rate. You can charge 15% on goods that are standard rated. The buyer can claim back input VAT. Whoever's buying our goods can claim back input VAT. Okay. This is assuming obviously they are a registered VAT vendor. Okay. Both parties here are obviously registered VAT vendors. Okay. Then when it comes to zero rated, let me use a different color. So number two, we have zero rated supply. Zero rated supply means that we, the seller, can only charge 0%. In other words, we can't charge anything. Because 0% is zero, right? But can claim VAT on his inputs or purchases. Okay, right. So we can't charge anything. It's zero rated, or we charge 0% in other words. Okay, and we're going to see the different types of stuff that fall into these respective categories. Okay, we're going to see them soon. Okay, then the buyer cannot claim any VAT back because it is 0%. All right, 0% was charged on the invoice received by the seller. So you can't claim anything. You can't claim zero. That's basically what we're communicating. All right, you can't claim zero. All right, so that's why the buyer can't claim either. You didn't charge him anything, so you can't claim back anything. Right. Then, thirdly, what do we have? Thirdly, we have exempt. Exempt. No VAT charged on exempt supply. So can you see, when it came to zero rated, we charged 0%. But when it came to exempt, nothing is charged. That does not feature on the invoice at all. Okay? Not even at 0%. Okay? So it's exempt. There is nothing on the invoice. Here on under zero rated, there is that, but it's just at 0%. Okay? In effect, in both scenarios, I'm not paying anything, but obviously now we're just looking into technicalities. One, it's on the invoice, one, it's not even there. Okay. What happens with the buyer? No VAT claimable on exempt supply. That does not feature on the invoice at all. Not even at 0%. Okay? Right. Then finally, we have one more. One more. Number 4. We have non-allowable items. Seller charges 15%. Okay, so here we're charging that. But what happens with the buyer? Although seller's invoice includes that, the VAT may not be claimed back by the buyer. Okay, the VAT can't be claimed back by the buyer. Right. Okay. Now, if you read from pages, it should actually be 78 to pages 70, yeah, pages 79. Okay. In fact, let me actually say pages 80. Okay, if you read between those pages, you will see they will all not only speak to these different categories, okay, but they will then also on page 80 give you examples, and I'll give you that as homework. I want you guys to do question 3.3. I want you guys to do question 3.3. So please read those pages. Putting this in the chat. Question 3.3. Need you guys to do this for homework. This homework. Let's go back to it. Okay, it's important that you know these different VAT categories and which uh, which items fall into which category, because obviously they will test you on this. Remember, test 1 is inclusive of unit 3. So you guys need to know this for when you do your first assessment. Okay. Now, let's go on. All right. We have, and they love to ask this question, guys. We have two types of invoices. We have a full tax invoice and we have an abridged tax invoice. All right. On a full tax invoice, number 1, now I'm going to use black. Tax invoice needs to be written on that invoice in a prominent place. All right. Usually, if you look at your receipts, you'll see that tax invoice is usually right at the top. Okay, and it's in bold. Okay. Then, secondly, what else do you need on a full tax invoice? You need the name, address, and that registration number of the supplier. The person who is selling the goods. Okay. Then you also need. I don't want to change colors because black is not loud enough. Let's try to do purple maybe. Then you need the name, the address, the VAT registration number of the recipient. Okay, the person who's buying these goods. Okay. Then you need the serial number and the date of issue. When did this transaction take place? All right, serial number, we need a reference to the transaction. All right, then you need full and proper description of the goods and or services. Okay, on that full invoice. Then you need the quantity or volume of goods or services supplied. Okay, quantity or volume of goods supplied. Then you need obviously the price and the VAT of these respective goods or services according to the 3 above methods discussed. Okay, just remember price and VAT. Okay, so first thing, you need tax invoice in a prominent place. Then you need name and address and registration, VAT registration number of both the supplier and the recipient. Then you need the serial number and date of invoice. Then you need full and proper description of the goods. Then you need the quantity and volume, and then you need the price and the amount of that is obviously due. Okay, then we move on to an abridged. Now in abridged, you still need the same thing. You need tax invoice in a prominent place. So you need a different color. All right, check. We need that on both. We need the name, address, and VAT registration of the supplier of the goods. All right, we need the serial number and the date of issue. Okay, we need a description of the goods. All right, and services, and then we need price and VAT. Okay, so here the easy thing to remember is just simply master the full tax invoice. All right, and then when it comes to the abridged, just remember the things that we don't need. All right, firstly, the thing that we don't need on an abridged, all right, is we don't need the recipient's details. Okay, we only need the supplier details. And then secondly, we don't need the volume or quantity of the goods. Okay, otherwise we need everything else that we would need on a full tax invoice. That's just an easier way to remember both of them. Remember what you need on a full tax invoice, and then simply say, okay, when it comes to an abridged, I don't need a recipient's, and I don't need the volume and quantity of the goods purchased. Simple. Those are the two things. See, it's much easier to remember that way than trying to remember each line item for both. Okay. And trust me, guys, they like to ask this in your test or exam. Okay. Right. Then the next thing that you get is what we call the two methods of payment when it comes to that. When it comes to that, there are two methods under which you may find yourself operating when it comes to that. In your textbooks, this is page 81. Okay, this is page 81 where we talk about these things. I did this slides quite a while ago. That's why I'm saying 79, but it's on page 81, at least in terms of last year's textbook. I don't know for the new textbooks. I think maybe that would then be maybe page 83 because it seems like there's a two-page difference. Okay, right. So when it comes to the payment basis or the cash basis, this is also known as the cash basis. Okay, what is happening there is, remember, input VAT is VAT that we claim back, and output VAT is VAT that we owe to SARS. Okay, input VAT is VAT that we can claim back from SARS. In other words, it's owed to us, and output VAT is VAT that SARS owes us. Okay, so then let's delve into this thing. When it comes to the payment or the cash method or basis, what we are saying is that we only pay that over to SARS when we have received money from our suppliers. Sorry, not suppliers, from our customers. You see? Only when we have received money. So let's say we did a transaction with them on credit. Only when they have paid us for the monthly installment for those phones, do we then pay a portion of that output that is due. Okay, and likewise, only when we make payment for our goods for cash, okay, can we then claim input back. All right, so only when payment has been made can then we claim input back, or do we owe output back. All right, that is your payment basis. All right, then you have the invoice basis. On the invoice basis, it operates different. Invoice basis. On the invoice basis, what happens here is that even if you completed the transaction for credit, so for instance, we went and bought our Simba chips for our Spaza shop on credit, that means that we can claim our input VAT even though we didn't pay for those goods yet. All right, remember, because we bought them on credit. All right, and even if our customers purchased goods from us on credit, we also still then owe our output VAT to SARS. Okay, so that is the invoice basis. Okay, very important. They also like to ask that question. Now remember, guys, I told you that you must know your source document. All right, every transaction must be validated through the issuance of a source document. All right, we've spoken quite at length at this, and you'll see there in your textbooks. Let's see. On page, this is on page 82 in last year's textbook. Going over to page, going all the way to page, what is this? Yeah, going all the way to page 89. You're seeing there various source documents. Okay, we touched on some of these. Okay, guys, revisit this. Okay. You need to know each and every one of these source documents. I'm going to give you guys an ICE task in relation to source documents. Okay. I'm going to give you an ICE task. Is it on Friday? But I could even give it to you after this lesson. We'll see. I could actually give it to you after this lesson. I think I'll do that. Today in the evening, I'm going to give you those ICE tasks, the first two ICE tasks. Okay. If I don't give it to you this evening, definitely before the end of the week in preparation for your assessment. Okay, right. So source documents, this is the receipt that you receive. This is the invoice that you give out. It's the ETF proof of payment. It's everything, every document that you would get that confirms that a transaction did indeed take place. That's a source document. Okay, in terms of accounting. Right. Then this is the last bit that we need to touch on before we break for a breather. Okay. And all that I want to highlight here is the easiest way to do back calculations. Okay. So what we need to register now, here and now, right, is that again, here we are using proportion, and we're using that formula that I taught you guys in learning unit 2, what we want divided by what we have times what we have random amount. That's what this R stands for, okay? Divided by, sorry, times what we have random amount. It's not divided by anything. Okay? Right. So that is the formula we will be applying, and this is why I was saying if you learn this now, it'll be easier moving forward. Okay, so we know that that is 15%. Okay, that itself is 15%. Okay, that's what we need to take away. That is 15%. Okay, now the VAT exclusive amount. All right, in other words, our price exclusive of that is 100%. Okay, that's the price we want to charge clients for ourselves. Okay, but remember we are VAT vendors, so we need to charge that. So we need to charge 15% of whatever price we are charging our clients. Okay, so our VAT inclusive amount is then going to arrive at 115%. In other words, it's going to be this 15% VAT plus the 100% our selling price, which will then give us 115%, the VAT inclusive amount. Okay, that's how we're arriving at that. Okay, I hope it makes sense. Okay. So that's all you need to remember. That amount is 15, that exclusive is 100%, that inclusive is 115. Now, like I showed you guys in unit 2, they will always give you two amounts, and then you need to work out the third. Okay, so here VAT calculations, if you are given the VAT amount, okay, and they ask you please calculate for us the VAT inclusive amount. All right, here's your formula. You simply say they're going to give you the VAT amount, all right, as it's highlighted here. If you're given the VAT amount, okay, they tell you that is 200 rand. All right, so to work out the VAT exclusive amount, this is what we want to work out. To work out the VAT exclusive amount, okay, we simply then say, okay, what do I want? What we want divided by what we have times what do we want? What we want is the VAT the VAT inclusive amount. All right, so we know VAT inclusive is 115. Okay, what do we have though? We have the VAT amount, which is 15. All right, then I said, assume, let's just say the VAT amount is 200 rand. We then say times 200 rand. Okay, and then that would give us the VAT inclusive amount. Okay, if we wanted to calculate the exclusive amount, the VAT exclusive amount, okay, we would then use the same formula, but this time we would say what we want is 100, because remember what we said, VAT exclusive is 100. Remember this slide over here? All right, we said the VAT exclusive is 100. So we're saying here 100 divided by what we have, which is 15, times again what we have rand amount, which is 200, and then we would get the VAT exclusive amount. Okay, right. Then here we're moving on. We're now just changing the scenario to say, what about if we're given the VAT exclusive amount, all right? But then what they want us to do is to calculate the VAT inclusive amount, okay? VAT inclusive. Again, we just say, what do we want? What do we want? Yes, what do we want? Which is, since it's the inclusive, we know that inclusive is 115. What do we have though? This time we have 100, because we know that exclusive is 100. All right, and then obviously times that exclusive rand amount, okay, which let's just say is 1,000, for example. Okay, then we can calculate the VAT inclusive amount. Okay, likewise, again, we could say no, we want to calculate the VAT amount this time. Okay, we want to calculate the VAT amount. Okay, so how do we do that? Again, we simply say, what do we want? We want the VAT amount. So 15 is what the VAT amount is, all right, percentage wise. What do we have? We have the VAT exclusive, which is 100. And then we say times the VAT exclusive, which we know is 1,000. Okay, so it's just simple proportion. Okay, there's a formula that they use in your textbooks, and some of you have been exposed to that in school. Guys, my advice to you is that use this formula because it's easier. But like I always tell you guys, I'll never tell you you must use this. Okay, but one thing I can tell you, and I've spoken to other lecturers as well, students who don't use this method, choose to use their own method, typically don't score as well as the others. Okay, because somewhere you end up getting confused. Okay, so here with this last slide, we're now saying if you're given the VAT inclusive amount, if you want to calculate your VAT exclusive, what do we do? Again, we're using proportion. We simply say, what do we want? We want 100, because we said the VAT exclusive must. All right, what do we have? We have the VAT inclusive. Remember, VAT inclusive is 115, and then times, let's just say the VAT inclusive was 1,200. Okay, then we would then be able to get the VAT exclusive. Okay, then here again, if we're saying we want to use we want to calculate the VAT amount. Okay, we want to calculate the VAT amount. We would then say, what is the VAT amount again? The VAT amount, we know it to be 15. Okay. But what do we have? We have 115. All right, and then we know what we have rand amount is 1,200. Okay. All right. So guys, that is that from a theory perspective, and then obviously we just concluded with these formulas. So again, now you can see the importance of what I was saying. All you need to know is this slide. You don't need to cram these slide 13 to slide 14. You just need to understand this slide. You need to understand that VAT is 15%, and your VAT exclusive is 100%, and your VAT inclusive is 115%. The moment you know those, and you know this formula, what do I want? What do I have? Times what do I have random amount? You'll be perfectly fine. Okay? Okay, that said, let me give you guys a breather. Guys, when is your first assessment? Can somebody post there in the chat when is the first assessment? I think it's in May. I don't remember the exact date, but I think it's in May. Okay. Can somebody please just help Japan there as well? Okay. Right. 5 May. Thank you so much, Melissa. Thank you very much for that. Okay. Right. Awesome stuff. So, guys, let's take our 10-minute break. At 9:03, let us then proceed. If you guys have any questions on anything that I have shared thus far, please just post it in the chat, and then we'll tackle it when we get back after the break.